Now, yesterday, most of the stocks, so when the stock market opened, we saw them trading over by 2%, some even by 4%, which brought a lot of excitement to some of the investors that are investing into those stocks. But I must say that this, one of the reasons why most of the stocks were trading higher is simply because of the FOMC meeting, which was set or which was taking place yesterday. So most of the stocks, or the stock market as a whole, believed that after that meeting we will hear positive news about the interest rate hikes and all those inflation data. We will hear positive news in relation to that. But as a surprise, after the FOMC meeting, or after Mr. Powell announced the developments or what they plan to do about interest rate hikes, we saw the market dropping yet again sharply, meaning that the market, or the stock market, did not like what was said or what was concluded at the FOMC meeting, which is something that is bringing much strain yet again to investors, because this, or what we saw yesterday, made those gains that most stocks had gained going down the drain again. Now, to those of you that might still not know what were the conclusions on the Fed's meeting, or on the FOMC meeting that took place yesterday, the Fed came out and said that they are looking at possibly raising the interest rate from March. So March, we can expect, or there is a possibility that the Fed might be raising the interest rate, which is something that which is that thing that led to the market dropping sharply. But I must say that something that I think also investors must note is that you remember that they did not say that 100% they are going to rise the interest rate in March. They said that provided that the economy situations allows, they will rise the interest rates. But if the economic conditions don't allow, then probably the chances are they might not rise or raise the interest rates. But this is something that, like I said, the markets did not like, or this is what led to the market dropping. Now, one of the reasons why I decided to do this video is for the fact that a lot of people, after the FOMC meeting, they were discouraged. They were saying that stock market is bad, stock market, you'll never get anything. It looks like most of the companies will never recover from this. But let me tell you that this thing that we are experiencing, or we are seeing the market doing, it's a short-term thing. I personally believe that the Fed won't always be rising these interest rates, which is something that must give you confidence. Is to say that long term, these stocks will still do well. Long term, these stocks will still perform probably the way that you anticipate. It's just that now in the short term, because of the interest rate hikes, we might see stocks not moving the way they're supposed to move because of this. Now, another thing which I saw yesterday is that some of the retail investors were selling some of the good quality stocks, not knowing the potential that lies within those stocks, which is something that I believe that as a retail investor is very important, that you know what you are buying. You know the companies you are buying. Don't buy these stocks, or don't buy these companies because of pressure. Don't buy these companies because of FOMO or fear of missing out. But buy this stock because you really know what this stock or what these companies are about. I think this is one of the things that will make you easily succeed in the stock market. You know the fundamentals that makes that stock to stand out from the other stocks in its industry, or from the other peers that of the companies that belong in the same industry as the stock that you are buying, or the stock that you bought. Because as I always say, this market condition offer good opportunities to the retail investors to load the boat on those favorite stocks that you own, to load the boat or to increase your holdings on those stocks that have good future prospects. So it's very important that before you press that sell button on some of these stocks, you make sure that, or you remind yourself as to why did you buy that stock from the first time. Is it still aligned with maybe the reason, or one of the main reasons why you bought it? Are the fundamentals of that stock continue increasing? Are the future prospects of that stock really looking so bright in a way that you can continue adding more holdings? If then the answer is yes, then I think that as a retail investor, you ought to keep holding that stock. And if your average share price is higher than where it's currently trading at, I think this is the perfect time for you to average down your average purchase share price of that particular stock. So this is not the time to panic. This is the time which I personally believe that it's a time for accumulation. It's time to accumulate as much shares as possible of those stocks or of those quality stocks that you own. This is the time for you to make it permanent. When these stocks rise again, or when the share price of these stocks rise again, you will definitely reap the good returns that you've always been waiting for. I personally believe that though these interest rate hikes will slow down some of the growth in these stocks, of course these stocks will, I think, yes, they started the year on a bad note, but some of them won't end the year on this bad note. I believe that some of the stocks or some of the growth stocks will end the year with a very good positive note, which is something that I believe as a retail investor, it ought to motivate you to stay long onto this or onto some of the stocks that you own. I mean, guys, every time I do analysis on some of these stocks, I just see massive discount. I mean, I'm currently in that situation where I just don't know which stock to buy anymore, but I'm just sort of like prioritizing, of course, those that were very close to my heart, because I will tell you now, most of the growth stocks trading in the markets right now are trading at a discount. Most of them, they are trading at a very good discounted price, which I believe that if you are to go in there and make sure that you add more holdings or make sure that you buy those stocks, so a few months down the line, I truly believe that you will be smiling at the returns that you would have generated from those stocks. So take your time, go analyze, go reevaluate the stocks that you own, and if they still make, or if it still makes sense for you to own those stocks, continue owning those stocks and look for more opportunities out there, because as I'm saying, there is massive opportunity out there. There's a lot and lots of opportunities to be found right now during this time. I mean, looking at the S&P 500, just to show you how the markets are, the S&P 500, I think to date, it has fallen off from its all-time high by approximately 10%, which just simply means that in average, the market is down, or the market is down by 10%, which is something that it shows you that looking at the stock market in broad, you can conclude that the stocks are down. All stocks are down, or almost all stocks are down, which, like I said, brings opportunity for you and me to go and buy those stocks that we've always wanted to buy. Well, I know some of you might be asking as to where do I start? Well, it's quite simple and obvious to say that you go in and check industry by industry, and you go check for the most undervalued stock in that industry, and of course the stock must be also set, or the stock must also be having good future prospects like the others in its industry. Then those are the first stocks that you need to be prioritizing when it comes to buying during these market conditions. So go out there, go check those PE ratio and compare the PE ratio of the company that you want to buy against its peers. Then if it makes sense, or if its PE ratio is lower than the average in its industry, then that simply means that that company is trading way below its value, or we can easily say that it's undervalued. Then, and of course, for the companies that are not yet profitable, you know that you can also use ratios like the PS ratio, where you also do the same task as the PE ratio and go compare that company against its peers, or go compare the PS ratio of the company that you want to buy against the companies in its industry. Then if it makes sense, or if you find that it's lower than the average of the companies in its industry, then chances are very high that that company is undervalued. And like I say, this only applies provided that this company is a company with strong fundamentals and its future prospects are also great. So go out there, guys, and look for this opportunity and load the boat or buy these shares or companies, as I can tell you that a few months down the line, as I've said, most of the retail investors that are not panicking but accumulating during this time are going to be very happy when looking at their portfolios. Otherwise, with all that, guys, I believe that, as I've said, this is the time to accumulate. This is not time to panic in the markets. This is not a time where you need to be selling your shares in the markets because of these sharp drops that we are witnessing. But this is the perfect time for you to accumulate shares in the stock market. This is the perfect time for you to add more holdings. This is the perfect time for you to bring down your average purchase share price on the stock which you own. This is the perfect time for you to make sure that you put as much money as possible on that favorite stock that is very close to your heart. And of course, when I talk of stocks that are close to your heart, you know that some of the stocks that are really close to my heart I've already discussed in many of my previous videos, saying that I'll be loading the boat, I'll be lowering my average purchase share price on those stocks. So I hope you also do the same and take an advantage of these low trading prices or low share trading prices that we are seeing in most of the stocks that we own. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit that likes button and comment. And otherwise, if you're new, don't forget to hit that subscribe button and click the notification bell so that YouTube can notify you every time I release a video. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey. And hey, before, of course, as I always say, go out there, make sure that you do your own due diligence on these stocks. Don't just take people's word out there and say that this stock is good, this stock will do very well in the future, but make sure that you also do your own due diligence and confirm the news or the good positive things that you hear about these stocks. Otherwise, always remember that this video was not a professional financial advice video. These were just my opinions, and you should not take them as professional financial advice. Otherwise, if you seek professional financial advice, you already know, like I always say, you need to go out there and look for professional financial advisors. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.